How are the markets looking this week, Ben?
Corporate earnings for tech giants were better than expected last week. Amazon continued its stellar performance from last year, posting a 44% increase in first quarter sales as the COVID-19 pandemic drove e-commerce activity. Google parent company Alphabet also reported a very strong result, with revenue up by 34% and earnings per share far exceeding analyst forecasts. Tesla also beat expectations, delivering 184,000 cars in the first quarter of 2021, more than double the number delivered in the first quarter of last year. The solid results weren't enough to lift equity markets though, and we saw both the Nasdaq and the S&P 500 finish last week marginally lower. The COVID-19 outbreak in India continues to be a point of concern in financial markets. The unfolding humanitarian crisis has prompted the federal government to ban incoming flights and impose heavy penalties for travellers who are returning from the country in order to mitigate the risk of outbreak here in Australia. Reported new case numbers in India rose above 400,000 on Saturday, putting incredible strain on the fragile public health system. The scale of the outbreak has prompted markets to re-evaluate optimistic forecasts of a vaccine-led economic recovery this year. We have seen that reflected in equity market weakness and falls in long-term interest rates towards the end of last week. The fragility of the economic recovery from COVID-19 was underscored last week by poor economic data out of Europe. German GDP shrank by 1.7% for the first quarter as lockdowns were imposed across the country to contain the spread of the virus. Spain and Italy's economies also contracted for the quarter as consumption and manufacturing activity showed weakness. The figures confirm that the EU has entered a double-dip recession, with total economic output shrinking by 0.6% in the first quarter of the year. Looking ahead, we have the federal budget due to be handed down on Tuesday of next week. The Treasurer has already been hitting the airwaves to flag that the concerns around debt and deficit disaster have been jettisoned and to prepare Australians for a big spending budget that will aim to push the unemployment rate below the 5% level. Young families are likely to be major beneficiaries, with the government telegraphing plans to provide further subsidies for childcare in order to encourage women back into the workforce. Traders will be watching the Treasurer's speech to gauge the government's commitment to securing the economic recovery and what that might mean for interest rates and commodity prices going forward. And that's finance.